Good morning. Today we are going to look into one of the interesting portfolio of Indian investors. So we have plenty of investors in the Indian stock markets. Whom do we follow with? Like Rakesh Jhunjhunwala, R.K. Damani, and Purinjivalli. So like that, there are a lot of investors who have made wealth out of stock markets. So predominantly, I would call them. Not all of them had made money through value investing or something like that, but predominantly this people or this crowd is uh, made their money, made their wealth through value investing or long-term investing. So uh, that's the reason. So uh, to start with, let's start with Rakesh Jhunjhunwala. So to give you a brief of him, so he's been called as Indian Warren Buffett, as everyone knows. He has significant holdings across companies. Maybe it can be a Titan or Aptech India, Rallis India. So I have a significant holdings, and he is one of the benchmark in the Indian stock markets. So what I thought is, let's take a stock of him and then analyze so that what exactly and what is the reason for him to invest in those business. So out of this, one interesting business which I like is, I thought of picking up Aptech India. So where that is the only stock which he had very significant holding, almost close to 50%. Uh, but if we see, that is a long time underperformer. So someone who want to look into Aptech India, that stock is a long time underperformer. That's the reason I left the stock apart. To start with, um, I'll start with Deltacorp. I'm not sure how many of you know about the Deltacorp. So, Deltacorp, the baseline of the business is into casinos and online poker games and all those segments. So, so the casinos, maybe many of you know the casinos in Goa. So that is being owned by Deltacorp. So Rakesh Jhunjhunwala's, uh, I would say it's not a very significant holding, but he is holding around 7.5% as an equity stake. So let's look at the deals when he has bought it. So in 2015, he started accumulating the shares of Deltacorp around 89, 90 levels, and then 70 levels, around million shares. Around 5 million shares he bought in 2015 alone, and another 1 million in 2016, and he exited around 2.5 million shares at around 280 levels. So it means he have bought around an average of 100 a million shares, and he has exited almost three times. That's a very significant money which he had made, but still he is left with 7% holdings. Let's quickly see whether there are any opportunities now. So still he seems to be holding around 4 million shares. Let's quickly see, because the share price has also been beaten down for a long time due to the COVID-19 and all those scenarios. So let's see whether there are any opportunities currently now where we can invest. So as usual, I'm going back to the screener. So uh, I have the screener already opened. So the company is Deltacorp. Uh, is the only listed company. That is the surprising thing. It is the only listed company engaged in casino, live and electronic, and online gaming. So online gaming in the sense, uh, very religious gaming, like playing poker, or everybody might have received ads in their Android phones or Apple tabs. Not in Apple, but in Android tabs. Play poker, play rummy, win 50,000, 60,000. Not sure how ethical the business line is. So that is one thing which is a red flag. Uh, to start with, that is one of the red flag. How ethical it is, how well they operate, because it's all about, I won't call it as a gaming, but it's all about gambling, right? So how ethical it is, how ethically they do it. So that is a question mark, and also the management question mark. How ethical the management will be when they are running the casinos or online gaming portals. We never know. There is a threat from government or authorities. That that threat is there. That is a significant threat. So one should keep in mind when they are allocating their portion of portfolio into this kind of stocks. So that should be always kept in mind. Now coming back quickly into the numbers, the company is today, as of today, it's valued around 3000 crores. The current price is around 118. So they have made an high of 224 and a low of 53. The stock is trading at 28 times to earnings, and return on equity and return on capital employed, not bad, but uh, this is not a very industry oriented business where you have a raw materials and you have a consumptions and you have a capital intensive business. It's maybe rummy is a technology oriented, and casinos, it's all based on cruise ships, right? So it's a one time cost. So return on capital employed and return on equity for that kind of business, it's not uh, very attractive, I would say. It's a normal return on equity or return on capital employed. That is one thing. Let's see what is the reason behind it. Maybe it will be a one-time event in this year, so we never know. And sales growth 20%, not bad, not bad. So now looking into this chart, they made an high of around what? They made an high of around 350 in 2018. Now they all the way back from 60 levels, they bounce back to around 120 levels actually. 100 levels, I would say, 100 levels or 120 levels, whichever it is. So let's see what are all the pros and cons. The company is virtually debt free. We know that the reason is these are not very capital intensive business, no fixed cost, one time cost. So that's the reason virtually debt free. So debt free, one good thing is the company don't need to pay interest to others, right? So they can keep their profit. Um, so entire profit belongs to the equity holders, right? So the profit growth seems to be very significant over last 5 years. Only cons is the promoter holding is low, 33%. So that is always a red sign, because a business which is doing good or which is going to perform better over a long term period, uh, who knows it better? So it's the management, right? It's the management who sees it's better. So from the internal view, so if there are hopes or futuristic growth, why someone should uh, have their holdings very insignificant? They should have a significant holding. The significant holding in the sense they should have holding greater than 50%, around 51%. That is one thing. That one thing. I don't know why they've kept 33%. Maybe the business is not attractive or something like that. That too, the share price is at low now, around 100. They were at 300 2 3 years before. So at low price, if the shareholders, if the promoters are not increase their holdings, now when they will increase? That is one sign, one question mark. Now quickly going to the competitors, I would say Deltacorp. They are the market leaders. Not sure. No competitors, zero competitors, I would say. They are the only market leaders. But at the same time, what is the reason for them to become only the market leaders? Because nowadays, creating a technology website with a poker or something, it's not a very mammoth task. So if Google likes to do it, they will do it in a week time. Uh, if Yahoo likes to do it, they will do it. So why they are not doing it? How differentiate this company is? The reason is not sure whether they are running their business with any government support or local authority supports. It might be one thing, but as far as the business model is concerned, uh, uh, so we are not supposed to bet. The gambling is illegal in India. So the cruise ship which is running in Goa, it runs in sea. It runs in sea, not in the land of Goa. That is one of the reason. That is how they're running the business. The mode of business is like that. That is one thing. Keeping other side apart, uh, the mode of business and the way of business, and how ethical is the management, how ethical the business, that is the big question mark. So keeping that side apart, looking only into the numbers, in 2009 they made a sales of 100 crores and an expense of 60 crore, and they made an operating profit of 40 crores. Okay, so after tax, so you can see the tax is mammoth, actually 37% tax. um, So it's morely like a speculation and gambling, like a derivatives taxation. 30% of your profit before tax is eaten by government taxes, around net profit of 7 crores. So around 7% for 100 crore sales, they are making a net profit of 7%. I would say not bad. I would say not bad, but around 7%. So, but at the same time, we should see whether there are any earnings growth. Now, coming back to 2020 levels or 2019 levels, their sales have grown almost around 7 times or 8 times, from 100 crores to 773 crores, and 498 crores as expenses, and operating profit margin is 276, and the net profit now is around 186 crores. So from 7 crores to 186 crores, it's unimaginable actually. Not even 10 times, not even 20 times, it's almost 30 times. So if you so what does it mean? So the 1 rupee should have grown to 30 rupees in a matter of 10 years time. In matter of 10 years time, let's see whether that has happened in from 2009 to 2020 in graphs. So in 2009 the share price was around 19, and 2020, I can say 2020, let me take at current levels only. In 2020 they are trading at 100, not bad, 5 times. But if you see this price around 2018 or something, literally they have almost 30 times, right? So they have justified their earnings. So so since their profit has grown 30%, even the share price have considerably more than 30 times, right? From 20 rupees to 300, or whichever it is, from 10 to 300, it's almost 30 times. They justified that time. Now the reason behind this correction is maybe the promoters are seeing the business sustainability over a long time. Is there a threat from government or internal regulations, something like that? So that's the reason now the consolidation has been happening. So that's the reason the share price have been underperforming for some time. Now they started picking up. So that is one reason. So now quickly look into sales growth. It's a spectacular growth, and the profit growth, it's a spectacular growth. So if someone is looking into buying this business at current valuations, the company which is earning 200 crores, I would buy for 2000 crores, right? So not bad, not bad. Only at numbers terms they are perfectly good, because even if we expect another 30 times in next 10 years, so where they will be, they'll be around 7,000 21,000 crores. So the company value will be around in 10 years term, only looking into the numbers, they'll be around 90,000 crores. So your share price will be somewhere around from 100, they'll be somewhere around 3,000 rupees. So 100 rupees shares will be around 3,000 rupees in next 10 years term. So but only looking at the numbers never give you the complete picture. It's always dangerous, because we need to see the underlying uh, business to how well they're doing. As I said earlier, now quickly looking at the balance sheet, zero borrowings, that is spectacular. No borrowings at all. So, and fixed assets, it might be the cruise which is standing in Goa or something, Deltin Casino. That is the only fixed assets. Spectacular. So cash flow from operation activity, you can see here from 2009 to 2019 20, excellent numbers in terms of operating cash flow from operations. And even you can see the investing operations, it seems like they are investing from 2018 to 2020. That is one good thing. Not sure from which mode they are investing, whether it is an online platform or through new cruises or new cruise ships or something like that. That's spectacular actually. I don't know what's the reason behind debtor days. It's it's nonsense to have debtor days analysis, because um, paying a poker on Deltin Casino, you pay upfront, right? You pay 3,000 rupees or 4,000 rupees and you pay upfront. So debtor days, it's literally zero. So it's spectacular. Only worrying factor is promoter holdings, which is significantly less, and FIA holdings. came down drastically from 23% to 11% as of now. And domestic holdings, are they increased? It seems to they have been increased due to low prices, and public is holding significantly. That's one thing. Now, quickly going back to the portfolios, still the investors like Rakesh Jhunjhunwala still holding their portfolios. So whether we can buy this stock, it's all depend on one's risk appetite. So how well they are going to do. First and foremost question mark is, are this business is going to survive around 5 or 6 years down the line? Since ethics is one of the interesting factor or an important factor too. Are they going to survive? That is first thing. Second thing is, how good is the management? They have survived for 10 years. How ethical they are, that is the second factor. And third factor, the numbers wise they are phenomenal and very significant. Now by considering the positive factor, if everything goes well, the online is something, uh, platforms are something a very booming thing. So we never know. So if the technology improves, we never know, a big company can do a buy-in or something like that. And they can increase the technologies if they tie up with some online platforms like Google or something. It can be a worldwide platform, right? So their business, this business scalability can increase. That is one thing. um, and also about the cruise ships, if other cities are increasing their cruise ships and they are allowing gambling legally, then I think since they are the market leaders, uh, I think no one can stop them. So it's all about risk. So investing is all about risk. One need to be very careful in investing. Uh, so I think hope it helps. So if if you like it, please post in comment, and then let me see you in next video on an interesting topic. Thank you for watching. Bye.